Hello, you're watching News.Markets. Bitcoin was designed as a virtual currency that you'd never actually own, but somehow investors tried to trade it through futures and derivatives until there wasn't enough market volatility for that to really work. But it's the innovative technology behind Bitcoin, the blockchain, creating layer upon layer of accountability that the big banks are really excited about. So where does Bitcoin fit into the investment picture? How do digital currencies present a challenge to traditional currencies, and what should investors do to spread their risk? Well, Augustine Eden from News.Markets joins me now. Hello there. Should investors think about Bitcoin as an alternative currency or as a technology?
Well, indeed, there are two ways of investing in Bitcoin. One way would be buy Bitcoin or trade non-deliverable futures. However, it's really the underlying technology that's really exciting. And you said banks are getting excited about it. I would say they're getting worried about it. It's a decentralized currency system, which means that the banks could potentially be defunct in a matter of years.
It's as bad as that.
It could be as bad as that. It probably isn't going to be as bad as that, because banks and institutions are very, very powerful. They're resourceful, and that's why they're getting really, really interested in this technology. It's all about trying to develop an efficient way of transferring ownership that can still be centralized in some way. And so investors should really be looking at this as a system that's being adopted by some very big names.
But doesn't it take a certain amount of technical know-how to be able to get behind it, to get inside it and make it work?
Well, you just have to think about it. When you do something like online banking, the reason we are so confident in putting in our card details and account details online, and even writing emails to each other, is the concept of cryptography, which protects our information from malicious attack, and we're all perfectly all right with doing that. And so this moves across to the blockchain in the sense of cryptography. So sounds very, very alien, and it's on face value, it's very difficult to get sort of inside it and work out what it's all about. But actually, it's based on some very simple ideas which are already widely used, and so it's very easily put into the current system.
So do investors just need to learn to code?
No, they don't even need to learn to code. It's a trust issue at the moment. We're dealing with a situation where whoever makes the most market noise is going to get heard. And so on one hand, you've got the banks, who for years everybody has trusted, the big institutions. A little bit of a wobble recently with Greece.
Little bit of a wobble?
To say the least. You've also had a massive financial crash in 2008. There's very little trust in the banks now. The banks are still shouting very loudly, but we do have these, well, for all intents and purposes, geeks who've come along with this new technology. And of course, to start off with, people were thinking about Bitcoin, the asset class, and the sort of alternative currency, the idealistic view of it. Now they're thinking, wow, this is an alternative to what we've got now, which we don't really trust. So the geeks are going to start making a bit more noise, I think.
Let's take a look at what Bitcoin's been doing, because you talked about trading it, and you talked about that volatility. There are some opportunities there, aren't there? Yes,
there are still opportunities. One big thing with traders was trading non-deliverable futures, obviously, but also cross-exchange arbitrage. So Bitcoin is traded on many different exchanges throughout the world. You may be familiar with Mt. Gox, which was liquidated, and all its resources were seized by the US Fed. But cross-exchange arbitrage leverages the difference in the Bitcoin price between two exchanges, so you can buy it on this exchange and sell it on this one and make a profit. So that's one strategy that's been used a lot of late. It's less popular now, and even the futures, with the volatility has gone down. It is still there, so there is some opportunity still, but it's waning.
Think about it in terms of the technology. Talk about the role of Bitcoin in terms of international transactions, because that's what the banks are getting a head around, aren't they? Because you'll be able to see every single piece of history in terms of a transaction, where it's come from.
Exactly, every single piece of history and every single every single transaction that's been made by everyone. It's like one big bank account that everyone is a part of. And the main advantage is that, you know, the current system is still based on a physical transfer of a physical good. Let's call it gold. You know, if I wanted to give you £20, your bank would get some of your gold, it would put it in a cart with some horses and take it over to my bank, drop that off. My bank would say, right, this is Augustine's gold, we'll add it onto his list. So the system now is still based on that, but we're not moving anything physical, you know. So interest rates are still paid on a daily basis. You know, everything is summed up together at the end of the day, and then the next stage is moved on to. So with Bitcoin and the blockchain exists in the cloud. And so everyone's got instant access to it. This means settlement can happen within minutes instead of hours and days or even weeks. You know, your credit card transactions appear almost instantly. Foreign exchange, almost instant. You know, you can do it at the exchange rate there. The transaction costs are going to be so much lower. It's going to be so much more efficient. And, you know, you're making a big mistake not taking note of it.
Well, Augustine Eaton from News.Markets, it sounds like there's a lot to get your head round, but the
Absolutely.
Bitcoin and the technology of the blockchain is going to transform the way we bank and the way we invest.
Absolutely.
Thanks ever so much.
You're welcome.